by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Hazel Rathod. Thank you, and over to you, ma'am.
Thank you. Good afternoon, everyone. Thank you for joining us for Bikaji Foods International Q2FY25 earnings conference call. From the management, we have with us Mr. Rishabh Jain, CFO, and Mr. Manoj Verma, COO. I now request Mr. Rishabh Jain to take us through the key opening remarks, after which we can open the floor for the question and answer session. Thank you, and over to you, sir.
Yeah, good afternoon, everyone, and thank you for joining the call. So, first of all, wish you all a great and happy Diwali. And so basically, from Bikaji lens, so company has delivered a robust growth in volume. So volume sense, we grew at 15%, close to 15% volume growth in second quarter. And from value level, basically all the category has grown at upward 20%. Be it sweets, be it papad, western snacks, grown at plus 20%. Ethnic snacks has grown at plus 10%. So all double-digit growth, despite tough challenging environment in the street. Overall, from category lens also, we did a reasonably good job. We also started consumer offer in this season, mid of September and August. So mid of August, basically, we started a consumer offer, Bikaji Khao Dandan Jao, which was never before. This is the first time we've done this. And we're getting good response from this campaign. And you will see the results from family pack growth. So our family pack is growing reasonably well speed compared to impulse pack. Getting good traction from the sale. Overall, from cost lens also, we've seen a cost pressure in edible oil, be it palm oil, or few purchases. But we were very proactive in passing on the prices. Or we are also learning working on cost saving program, cost control program, where our team is working on cutting the prices and saving the price for the company. So largely, at both levels, we are trying to maximize profit, but our main endeavor will be growing the volume, at least for next two years. That's main endeavor will be. Overall, so in quarter two, our value has grown at 18.5%, where volume growth was 15%, and if we exclude PLI, our value growth is close to 16%. Our EBITDA growth is close to 22%. Our EBITDA is at close to 14.8%, but without PLI, our EBITDA is close to 13%. Overall, PAT growth compared to last quarter was close to 14.7%. Our gross margin in first quarter was close to 32.2%. And this quarter, despite increasing price in palm oil, increasing few purchase price, we try to maintain the gross margin same level, close to 32%. From H1 lens, so basically overall, our revenue growth is the revenue from operation growth is 18.5%, where volume growth is very strong at 15.5%. Our EBITDA growth is close to, EBITDA margin is close to 15.3%. Also, like this year, Diwali is in October versus last year Diwali was in November. So last year we got extra 10 days, 7 days. So the sweet sale is major push in second quarter this year versus last year. It was also in contribution was good in third quarter. So there will be little preponderance of sweet sale in this quarter. From overall capacity lens, so we are good in capacity. So we have built capacity in last 2.5 years across all core and focus market, and we are largely okay with what capacity we have for next 2-3 years. We doesn't need major capex for growing the capacity for investment. In sweet category, of course, we will do some investment in next 1 year to grow the capacity to meet the expectation, because we are seeing great conversion of phenomenons to organize in sweet category. And there are a lot of innovation which we and across the industry is doing in the sweet category, adding few products which are markets like Kaju Katli or Laddu. These are big products coming on in the last 1 or 2 years. What we have seen. So overall, some number of outlets lens. So basically, we always focus on adding direct coverage. This is what it helps us in getting right distributor retailers, and focusing on right starting on schemes, so focusing on right coverage, focusing on right product and right outlets. That's what we are focusing on. Our We added sales team in last 1.5 years, and because our major focus, like you'll see in the last 1 year, where in September 23, our overall direct reach was 2,08,000, we increased to 2,78,000. So it was 7,000 increase in direct coverage, and that's what our endeavor is, to reach at least 3.5 lakh outlets till FY26.
Yeah. So this was a Bikaji Khao London Jao consumer offer. This was on our large packs, family packs, and a never before kind of an investment for the consumer what we did. This has given good and very, very magnanimous branding opportunity across. And the vehicles that we used onto it was getting onto prime time. We were also co-sponsor for Kaun Banega Crorepati kind of programs across channels, news channels, print media, BTL, and the rest of the activations along with it. So there were a lot of noise, or which is still there in the market, because this promo would continue till 15th of December. So half of the last quarter is what we could utilize in this, and we'll have almost full quarter 3 to leverage on this promo. The entire buzz is being created around social media. Talking on the quarter 2 business performance, if you look at, so volume growth, as Rishabh spoke about, is 15% over last year. Revenue growth 18.5%. This is inclusive of PLI. Net of PLI is 16%. The thing is that ethnic snacks is at 10.5% growth. Western snacks at 23.2% growth, and packaged sweets at 22% growth. Normally, there's always a theme when sweets does high or is on a high growth or high share of business. That's the time ethnic snacks takes a little hit on that stuff, because end of the day, there is a stocking capacity on the retailer's shelf, and the stock bit in the stores goes down. So that's a general phenomena if we look over last many years. That's how it works. So this is purely in line of it. Papad has grown in this quarter at 26%. So sum total Q1, Q2, so YTD H1 numbers, if we look at, volume growth stands at 15.5%, revenue growth at 18.6%, ethnic snacks 13.1%, packaged sweets 22.7%, western snacks at 24.5%, and Papad at 19.4% growth. A trend if we look at now over quarter 2 last year versus quarter 2 this year. So ethnic snacks contribution from 68.9% last year is now at 65.5%. This is primarily because higher salience of sweets in this quarter. At a H1 level, if we look at, so H1 25, it's almost 70%, which is ethnic snacks, and over last year it was 71.4. Sweets has slightly moved up, which is what Rishabh was explaining, that this time it is a little early Diwali, so it has moved up in this quarter, moving up to 13.5% contribution versus 12.8%, which was last year. Western snacks is at 9.1 versus 8.4 last year. Our others is at 2.6 this year versus 2.5, which is almost the same. It is Papad which has slightly moved up at 5% share of business versus 4.9 last year. Talking about geography, so our core markets in this quarter has grown at 11%. Focus markets has grown at 27%. Other markets has grown at 34%. That's on the back of modern trade and sweets and gifting, which plays a big role in the rest of the states. Export continues to grow at a good double-digit number at 20% in this quarter. Overall, H1 data or growth percentage, if we talk about, core states are at 12.7%, focus at 14.8%, other states at 40.6%, and exports at 14.7%. what we always talk about now, our dominance or the strong footage on the family packs. So in quarter two this year, family packs has grown at 22.4%, while impulse pack was little slow at 6.9%. The contribution of family pack hence is now at 62.3% in this quarter versus 59.1% in the last year quarter two. But at a H1 level, if we look at our family pack is at 19.7% growth, impulse at 10%, and the split between family pack and impulse pack is 59.6 versus 57.6% last year, and the impulse pack this year is 39.1, which was 41% last year.
So overall, from revenue lens, so we have done close to 721 crore of revenue from operation, where EBITDA is close to 107 crore rupees. The EBITDA margin is at close to 14.8%. Overall, so compared to last quarter overall EBITDA was close to 16%, primarily due to higher gross margin compared to this quarter. So, but overall compared to in this quarter, so we had an ad cost of close to upward of 2%. That is in last quarter one, our ad cost was less than 0.5%. So despite increasing ad cost, our EBITDA margin is intact, and largely there's a lot of efficiency which has been below gross margin level, which has came in once we start building sales and top line, and that's what we will see in next 2-3 years. Also from cost management level, so we've done a lot of cost management activity which has helped us in overall maintaining margins. This, be it managing freight at right place, opening depots at different place, or be it at cost RM raw material, packing material level, where we have done long-term contract at the right time to have hedge in overall pricing of our commodity. This is edible oil. So basically edible oil. So in last quarter, majorly in September, we are seeing increase in prices, but in third quarter, we are seeing edible oil price increase in a different level. So overall edible oil has increased compared to last quarter, it's close to 22%. But overall, what we also started passing on the prices in October. In October first week, we increased the price to the tune of 2.5% in salty snacks category, which will help in maintaining our margin at overall level. And this year we've seen a good crop across a good rain, and we are seeing good crop coming in. So we are seeing the price reduction in key commodities. We started seeing all in wheat, mold dal, wheat, peanuts, and everything. We've seen price reduction. So we are hopeful that in next third and fourth quarter, we again came to our original level of gross margin. From balance sheet level, so it's in second quarter largely we see upward of data in stock. This is mainly to support modern trades normally to 30 to 40 days of outstanding. So largely some modern trade and few general trade party, but normally in third quarter it's all realized. So this is a second quarter phenomena where Diwali season is upstick of stock and data. That's from the presentation part. I'll also update on PLI. So we'll file. So there is last year PLI. So basically we'll receive in fourth quarter from the government, and we'll file all the filings to the government by third quarter end of third quarter. So we're hopeful that government will reimburse the same in fourth quarter. Normally it's 12 month phenomena that we'll receive the same in a duration of 12 months. That's about. Thank you very much. We're happy to answer any question.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Percy Panthaki from IIFL Securities. Please go ahead, sir.
Sir, can you give some idea on what is the inflation in palm, especially after the import duty was levied? And does it make sense for you now to also launch some other variants which are not made with palm oil if the cost differential isn't too huge? Maybe price them at a slight premium with a health focus, etc. Does that make sense? And thirdly, what are the pricing actions that you have put in place or which would require to be put in place in order to meet the input cost inflation?
Thank you, Percy. So basically, of course, so you will see that our average purchase of palm oil was close to 100 rupees in the second quarter versus currently we are doing 125 plus right now. So we're seeing increase in palm oil and not in palm oil, but they are all the other oil because all run in same way. But yeah, we have immediately taken action and we have started passing on the prices in October first week. We have increased the price of our all sorted next week in 5 rupees, 10 rupees, there will be some damage. In tandem, we will increase MRP. So we started working on the same and we increased it to 2.5%. So that's the action we have taken.
Sorry, how much? I missed that.
2 to 2.5%, between 2 to 2.5% price rise.
And that is enough to maintain your margins, or this is only the first tranche and more price increases would be required?
It's largely enough. So basically, we are also seeing post November. So from mid of November, we are looking some downside in key raw material. So it will be helped largely. So we are not seeing any major price increase in first quarter.
Understood. And a lot of companies have been talking about urban slowdown. Are you witnessing any such thing in your business?
Yeah, Percy, Manoj this side. So that's true to a certain extent, but it so happens that our gifting and sweets is very, very large. And that is the reason that for us, urban has not been as bad. But, when we visit markets and all, and which is reflecting, from our small pack performance, which should have been much better, but it's on a slightly lower side. So yes, that's what is the stuff. Because, when you do wholesale or these peripheral small outlets in urban where the throughput of small packs is very high. So that has slightly come down. Overall, if we look at rural has grown or done better than urban, net of gifting and sweets if we look at.
So going ahead, let's say in 3Q or definitely in 4Q, this gifting and sweets will not be there to rescue. So if the demand environment continues at the current level, how much of an impact do we see in our business in terms of volume?
So two things. One is that if you look at our business phasing in quarter 2, quarter 3, it has a huge component of gifting and the sweets, right? All I meant was that these two components has huge share of business. But in terms of growth standpoint or budget delivery, they are in line with what we had planned. In quarter 3, these two components are small. So what we have done is, and which is what I was trying to explain, that to keep up this urban momentum, the Bikaji Khao London Jao, the consumer offer, we have extended till December. So this would certainly help us both in Bhujia and in Namkeen. So that's what we are covering. And more so our teams is on to it. I mean, there would be certain things which we would be doing so as to proactively, find out that what is that we need to do, and we will see these programs rolling out in the marketplace. So we are cognizant of this challenge and trying to address that.
Got it. And coming to your focus states, can you give some color on out of the 5-6 states that we have, where is it that we are getting very good traction? Where is it that we are lagging? Roughly what kind of market share we have achieved in the best among these 6 states? Some flavor of that, please.
So we added, last year one state in our focus state, which is Chhattisgarh, and that was primarily because we got a plant up in Raipur, right? So this is a small state, small in terms of the category size as well. but we've got very, very good results, in last 1 year, what we've seen. So Chhattisgarh has come out very well, which is in the upwards of 5% market share as we speak. Even otherwise, if you look at, there's a share gain across states, across all the focus states. Delhi is one state which has not done so well. I mean, because of competitive intensity is fairly high. And I think, when we look back, we also haven't done or could not do as much for Delhi. So that's what would need some more attention. Otherwise, rest of it is all on track, and that perhaps is the reason is that overall 27% growth from focus states in this quarter.
Okay. That's it from me. Thanks and all the best.
Thank you, sir. The next question is from the line of Anand Shah from Axis Capital. Please go ahead, sir.
Yeah, hi, sir. Just a question on the recent acquisitions, of THF and you looking to sort of build house of brands in QSR. So just wanted to understand your thought process here and any specific capital deployment you have planned here. Are you looking for more acquisitions? Will you also be scaling up the Bikaji brand into QSR and all?
Right. So Anand, basically, this acquisition major objective was we want to create a house of brand strategy where Bikaji will mainly focus on North Indian snacks and sweets. But you will see bakery, artisanal sweets is a big category coming up, and it's a big market we see in 5-10 years. And that's how this hazelnut factory came in. And this is majorly into artisanal sweets, bakeries, or coffee. So that's a major sale, and the best part is it's highly profitable. They are doing a bit of close to 11-12% the top line what they are doing, and we see great potential in the next 5-7 years. So with this business, currently we have valued the company at 100 crore pre-money, and we've taken 40% stake in first tranche. In the next 2 years, we'll increase our stake to 53-54%. That's a plan. That's a plan we have as of now. But yeah, we see great potential, and we normally look into it when we see acquisition basket. So we see small brand where we can help and make them big. That's where we'll focus on.
Got it. And they would have, so all these bakery and artisanal products you will essentially be looking to scale up in your own distribution, and it will be more like this cafe QSR model.
Right. So basically, Bikaji QSR will also come up in end of this year. But yeah, so basically we're also evaluating all other divisions. Be it this bakery business is big, it's very big, and so they are very beautifully made. So they are made this business. So we see great potential in this acquisition. What we see that this business can become 5x in 5 years comfortably.
Okay, great. And also on another acquisition, if you can outline Ariba Foods, you had done a little while ago, a few months back, on the frozen food side. So you're also expanding capacities in frozen. So what is the plan here in terms of scaling up the frozen business?
So basically, we are strengthening our backend. So we have one frozen plant in Bikaner, which is in Bikaji Foods, and then in Ariba Foods. So we have done complete backend. We have strengthened our backend, and now so this our QSR versus this hazelnut also, when they will scale, this capacity will help them to grow further into business without looking at any other investment in capex.
So Ariba will act as a backend as well as enhance your export business, both?
Both. Also, they also in export also, frozen is a big category, and we will start focusing in export post Diwali for the outside India market. There's a big opportunity for us.
And currently, how big will be your frozen exports business?
Currently, it's very small. It's close to 25-30% of overall export, 25%, 26%.
Okay, a little bit small. Okay, got it. And lastly, is any specific amount of capital that you have sort of blocked in your internal plans towards this QSR expansion and all?
So we don't see any major expansion coming in the next 2-3 years, and we have done major capex in the last 2-3 years. Now normally, so we'll generate a lot of cash in the next 2-3 years. So we'll look at right asset which can give either category addition or anything. So we'll invest into this, but yeah, it doesn't require any major fund in any way.
Okay. Got it. And on your focus states, I mean, the kind of expansion and distribution are you doing? Are you seeing any resistance from any competition there or any competitive intensity rising, because you are expanding and doing well in some of the focus markets?
See, we are very small at this point in time. So now our competition, to start with, and getting distribution is nothing to do with the major giants there or the market leaders. It's a journey. It's getting our placement done, which is what we're working on, and we have gained number of stores in these focus markets as well. I think that perhaps the question what you're asking would be getting shares from the competition or from the market leaders. That would be part 2 of it. But for now, distribution is falling in place. Our ATL activation and BTL activation gives the air cover to the sales team to get this placement in these markets and in these stores.
Got it. And one last question, this campaign that you are running, that you'll be booking the costs in the A&P line. So this 2% of spend that you have done this quarter, that would be capturing the campaign.
Yeah, that's a consumer offer. Yeah, so ATL spends.
All the financials, all the costs.
Yeah. And so on A&P, will you see a good amount of hike this year because of these consumer offers and all? I mean, versus your usual spend and all?
No, we'll manage within our budgets what we have. I mean, this is just a allocation. I mean, what we get in this term.
Perfect. Thanks a lot, Pete, and happy Diwali to you.
Thank you. Same to you.
Thank you, sir. The next question is from the line of Abneesh Roy from Nuvama. Please go ahead, sir.
Yeah, congrats. My first question is on the 5 rupee price point. So we have seen in the past few years, noodles face this issue that at 5 rupee, the grammage became so low that they had to vacate it, and eventually even 10 got vacated even in the urban areas. So I wanted to understand at 5 rupee, what is the challenge? Are we very close now to saturation point, given palm oil is seeing very sharp inflation? If you could talk about, is the customer happy at that 5 rupee price point against the grammage which you will now offer post the grammage cut?
Hi, Abneesh, Manoj here. So I think now the example you took of Maggi is perfectly right, because that used to be a meal, that was not a snacking. I think the better example would be biscuits, wherein 5 rupee pack still exists and still a dominant share of business of this particular price point. And our the snacking category is also in line with the same. So for now, the price is going to be passed to the consumer, which they will witness in this month onwards, right? So that's where it is. But I think there is still a headroom that now we can go ahead. Over a period of time, maybe in say 3 to 5 years is what you will see the larger impact. Because if I look at 5 and 10 SKUs put together, still in the namkeen category, they contribute to 70% of business.
Okay. And second question is, whenever the new packaging norms come in terms of all the carbs, fat, and all those calories, etc., being more prominently featured, would you see that as an opportunity, given the local players, or maybe the customer also will then become more aware, and so maybe he will go towards more branded? But flip side is maybe he will cut down also, because on health and all this heart related issue, and the customer awareness is also increasing. So if you could specifically comment on the packaging norms whenever they come, how do you see impact on the business?
Yeah. So, we abide by all the norms and the compliance which comes as and when. If you look at how visualize just a 5 rupee pack, there's hardly a place to put, or when you put, I mean, for a consumer or a shopper standpoint, not as comfortable to read even. 70% of the business happens from 5 and 10 rupee pack. So that kind of an on-the-go consumer is not as much conscious. It is the family pack wherein, these things go loud and bold. And that is good for us is in terms of that vis-a-vis competition. I think we would only gain mileage in that stuff. To your last point, I mean, we haven't seen these changes. If you see every year there's something or the other has kept on changing. But that has not been had made any impact in terms of any measurable impact on our business, which I can quantify.
Sure. Last question is on your quick commerce, e-commerce, if you could share some more initiatives and numbers. And second is a lot of FMCG companies are expanding in rural areas significantly in terms of van direct distribution reach, etc. For example, Godrej Consumer spending 100 bits of their sales on vans, significant investment. If you could tell us in terms of van usage in rural areas, how much is the usage by you currently, and do you see that significant ramp up can help in this kind of business?
Yeah, so I'll take the latter question first on the van coverage. So currently what we do is we subsidize our distributors, right? And which is what they do. So it's not a company operated vans we have, right? We are not in that model. But yes, we are evaluating it in the focus states where we are not as strong or where the distributors are not getting as much ROI to run on their own. That's on the cards, but we haven't started as yet. Howsoever, our coverage in the rural market in the core state is pretty high, but then done and led by our super distributors or the sub distributors there.
Okay, quick commerce, e-commerce.
And yeah, so I'm coming on to quick com. So Q-com is doing extremely well, and it's not only for us. I think it's for the industry as such. Talking about numbers. So H1 growth for Q-com is 165%. So that's the kind of number, obnoxiously high, but also because of one lower base, and second that they are also opening more and more pin codes. So it's both organic and inorganic growth, which is what is translating into these numbers. But yes, very promising, and this heat is going back to the general trade accounts. Right, so there's a lot of noise around, the general trade that our business is going to Q-com and all, but that's how the business is. I'm sure GT will, being a very high share of business, would continue. But for now, yes, there is some resistance. How we as an organization look this Q-com is an opportunity to grow our category, because many a times, a Q-com consumer, in the absence of Q-com would not have had that product, but this ease gets him to consume that stuff. So it is a little bit of cannibalization from general trade to Q-com, but we see it as an opportunity that now this is how the category is also growing or will help category grow.
Just one small follow-up, and that's the last. So in terms of 5 rupee, 10 rupee on quick commerce, is it different versus company average as a mix?
We hardly sell 5 and 10 on that stuff.
Okay. Sure. That's all from my side. Thank you.
Thanks.
Thank you, sir. The next question is from the line of Nitin from MK Global. Please go ahead, sir.
Hi, thanks for the opportunity. Hi, Manojji. Hi, Rishabh. I just wanted to gauge further on the raw material side, where Rishabh has highlighted that mid-November raw material prices should ease. Can you elaborate on that?
Raw material pricing? What needs to be elaborated?
No. So raw material prices are inflationary, and you are expecting by mid-November prices to sort of ease.
Yeah.
Yeah, so can you throw some light into it, which all raw materials and how the easing you are expecting?
All the purchases, because the fresh crop normally comes in October and November. So there's a fresh crop, so we normally see reduction in pricing across each raw material. Also, like for I'll give example of potato. Currently, potato price in a rooftop. It's the end of potato season, but in November, mid to November end, we'll see again fresh potato come in, and the price will be close to 50% of what we are paying as of now in next 1 month, right? So, and that's what we see in all the key crops. So we see major price reduction, ease down in few commodities. Key commodities what we are using as of now. But yeah, edible oil is a big factor which we have tried to pass on the same to consumers. But yeah, other than edible oil, all the other purchases what we see ease down of prices. So to 5 to 7, 5 10.
And this edible oil is how much percent of your raw material? Is it around 30% or higher?
Need to check, but yeah, close to 25%.
Okay, 25%. Okay, thank you. Second question is on employee cost remained on a higher side. So what are the drivers? Is this because of like a high contract labor or like the ESOP cost or something? Can you help us?
So last year it was ESOP cost. So last year in December we given ESOP to our employees. That's the ESOP cost, which is one of the major part in increasing employees. But yeah, we are largely in last year we added frontline employees, frontline sales team to drive our MDs and drive our sales. That's what addition. But yeah, overall we also added leadership position like CHRO has added in this year. So we are investing a lot in the people, and that's what will drive business in future.
So is the employee cost increase going to be high going ahead also?
Oh, we see 12 to 13% growth year on year for next year.
Okay. And lastly, if I look at your capacity, installed capacity data, so there is some shift or there is an expansion QoQ in namkeen and contraction in sweets. So any specific reason for this?
So now there is a punch increase in namkeen versus change in special snacks largely. So there is some just classification I think no change.
Okay, so line wise, like in terms of your capacity remains same, it's just the classification. Okay, okay. Thank you. Happy Diwali.
Thank you.
Thank you, sir. The next question is from the line of Shirish Pardesi from Centrum Broking. Please go ahead, sir.
Hi, Manoj. Good afternoon. Rishabh, good afternoon. Thanks for the opportunity. And congratulations on the hazelnut acquisition. So I have three questions. So start with hazelnut. In the first half, what is the number? And the question here is that when do you start reporting and consolidating numbers for hazelnut?
So these hazelnut numbers will get reported in post December 26 when we will take 50% plus stake in the company. So these are first tranche where we've taken 40% invest 40% shares in the company. By end of next year, December 25, we'll take another 7-8%, and then 5-6% December 26. Suppose that we'll be having majority in that time, this number will get merged into our business by December 26.
Okay. But would you be able to share what is the first half number in FY25?
In FY25 first half, it's close to 24-25. Close to, I need to check, but yeah, it's around.
Okay. So it's running the similar run rate because last year I think you found 44 crore.
Diwali and gifting is big for them, like what's for us. Because they are also running like what Bikaji store is. They're big stores majorly focusing on sweets, gifting. So that Diwali is also big like what we have.
Okay.
And see, that's perishable stuff, so it's not on CPG kind of a stuff. So you will see that hazelnut, a very big performance getting into this October month, so which would come up in quarter 3, not in H1.
Yeah, I understand, and that's why this question I made, Manoj. Okay. My second question on slide 21, when you compare last year versus this year, the family pack contribution is moved from 59 to 62. So just more curious because your promotion is on and it will also last till December. So what kind of contribution we will expect? I mean, it will inch up, but will it be significantly rise to maybe about 75-80%?
No. So basically the ratio will be around same. I also told you that. So largely in this year's Diwali is little earlier. So last year Diwali was in November 10th. This year Diwali is in October 31st, right? So there is little preponement of sweet sale also in this quarter, right? So that's how sweet sale is looking at 20% growth. But overall, when you see a 6 months number, it will be at close to what we're doing in ethnic snacks. So that's how overall what we see the ratio will be around same because impulse pack will also grow at the same level. It will not be a 6-7%. So overall, what we see 60-40 ratio will be maintained in third quarter also.
Okay. No, I potentially if the contribution has gone up about 400 basis point, it's a perfect case that we can expect the margin expansion. Is that the case or right assumption we should go with?
So margin expansion, so majorly your major focus is at least for next 4 to 6 quarters is to drive growth. That's what our major endeavor is. And of course, margin, we want to do a profitable growth. That's what our principle as a principle. So yeah, overall, but yeah, the margin expansion level, we want to do margin EBITDA of the same what we did last year. Target to be at 39.5% type of in this year. That's what we will try to maintain. Subject to some any other currency like edible oil taxes came in, nothing comes in as of now.
Okay. The last question on the edible oil sourcing. Can you just explain how we source edible oil? Because we see the prices has really moved out of roof, and there is an escalation on duty also. So just more curious how we will manage this cost.
So we source from all the big vendors in India. Nothing from, because we're not sourcing directly outside from India. We are sourcing from Indian vendors. All the big vendors who were selling edible oil. So, but yeah, we are not only dependent on farmers. We are mainly using cotton seed oil, which is mainly farmed and produced nearby Rajasthan. So that's a key commodity which is equal size to what we are using farmer, and that's equal size. So, but yeah, overall price of both the edible oil are largely same. They both go together, either up or either down. But yeah, overall what we do that we have kept a minimum threshold in gross margin level. So once any this threshold breaks, we immediately increase the prices. That's what we done. In October first week, we pass on the prices to consumers at both weekly first and family to maintain that threshold.
So just one quick follow-up. Do we hedge and have the fixed contract, or we have a spot and that's the way the Indian operators will start working with?
In pulses, we normally hedge for a longer period of time. But in edible oil, we normally hedge close to 2 to 4 weeks of type of thing. We don't do long-term hedge.
Okay. Thank you, and all the best to you, and happy Diwali to you.
Thanks, Shirish. Happy Diwali.
Thank you, sir. The next question is from the line of Priyank Chheda from Valum Capital. Please go ahead, sir.
Hi, Manoj and Rishabh. My question is on the distribution. If you see the direct reach addition has slowed down significantly over the last few quarters now. We are at 278,000 and we had a target of 350,000 by the year end, which means that for next half, we'll have to accelerate the distribution significantly. So first on how this has decelerated, how it will again accelerate, and if you can also divide this direct reach into focus and core, what has been the reach for September?
Yeah. Let me clarify to start with. When we said that 3.5 lakh outlets, so that's the outlook or the target what we have for by 26. This year we said we'll add 50,000 outlets, and another year we'll again add 50,000 outlets. So we are well on track, or rather ahead of our expansion plan as of now. This quarter 2, if you look at, is more of Diwali preparations and all that stuff. So therefore, here the game is more of the same store growth or throughput. Now you will see that the major expansion, and we internally intend to cover one or come close to our expansion numbers by end of quarter 3 itself. So whatever spillover or the last tranche is left will get completed in quarter 4. So against 3 lakh exit plan for this year, we are already at 2.78 lakh. So well on track on that stuff. And balance 50 would come from the next year, which is 25-26.
Okay, perfect. I thought 3.5 was for this year. What was the breakup between focus and core as on September?
Just give me a second. I'll give you the exact number. 1 second. In the meanwhile, any other question if you have, you can please.
Yeah, just on the clarification part, while Rishabh mentioned, for full year we will target around 13.5 kind of EBITDA margins, while the earlier guidance was we were looking out for some around 500 bits of expansion for the full year versus last year. So is that because we expect some volatility in the commodity prices for second half is what we need to bake in while we keep it for while we bake in for the full year around 13.5?
So largely that's what our major focus will be, drive growth. That's what the volume growth is most for us. But yeah, overall, At marginal also, target is to increase up to last year, but yeah, that's what we try to maintain. 7.5% is the EBITDA level what we try to maintain this year. Pre-PMI.
Okay. Cool. No problem. Thank you. And meanwhile, whenever possible, you can send across the distribution list for focus and core. Thank you.
Yeah.
Thank you, sir. The last question is from the line of Tushar Khurana from Dasvalado Advisory. Please go ahead, sir.
Hello, sir. Thank you for the opportunity. Sir, in last quarter, your export growth was around 6.7%, slower than expected. Have exports picked up regarding your segments, like in quarter two compared to traditional snacks and Western snacks?
So exports like basically pre-Diwali. So Diwali is in October. So exports normally we mainly focus on sweets and namkeens with that. That's what is, of course, frozen is doing that. So that's what major focus is.
Western is a very small component in exports business because it carries a huge logistics cost whosoever picks it. So it's primarily, if you look at it, is namkeens and sweets. That's the key stuff. And namkeen, sweets and frozen, three of them.
Okay, sir. So, you are planning capital expenditure. So, can you tell me, on what segments you will mainly do your investment, like to support expected demand growth of your segments?
Nothing major capex addition is there. So it's regular maintenance capex plus few addition sweets category.
So what Rishabh was talking about, perhaps what you're taking away from, is that sweets we will build some capacity. That's what it is, but that will be a very minor investment.
Okay, sir. That's it for now, sir.
Thank you very much. Happy Diwali.
Happy Diwali, sir. Thank you.
Thank you, sir. Ladies and gentlemen, before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Vineet Botra from IIFL Management. Please go ahead, sir.
Hello, sir. Thanks for the opportunity. My question was on the QSR part. Like in the last con call, you have mentioned that the trials will be going on for next 18 months. So as like you mentioned that you'll be opening 5 to 6 stores. So in which states you are planning to open the stores? Can you just justify?
That's very early to answer. Maybe by next quarter end we'll be able to tell you about it.
Okay, thank you.
Thank you.
Thank you, sir. The next question is from the line of Niril Parekh from Aviga Capital Advisors. Please go ahead, sir.
Hello. Hi, sir. First of all, congratulations for the set of results you have achieved. My question is for the hazelnut factory acquisition that we have done. So with respect to that, I need some data inputs for the store, a mix of the 6 to 8 stores they have.
Gentlemen, you're not audible. Can you be a little closer to the microphone?
Sure, sir. Am I audible now?
Yes.
Okay. So my question was respect to the hazelnut factory. So over there we have acquired like around 6 to 8 stores with that, and I wanted some data for economics, like how much is the capex to per store, revenue, assets, the average order value we get, etc.
So largely the one store cost is close to 2 crore rupees, and they normally sell close to 6 to 7 crore rupees of sales in a year. So that's overall metrics of this hazelnut factory. And overall per person or per bill value is close to 350-400.
Okay, thanks a lot, sir. That's something.
Thank you, sir. The next question is from the line of Raj Sharma, an individual investor. Please go ahead, sir.
Hello. Am I audible?
Hello. Yeah, very much audible.
Thanks for the opportunity, sir. My question is, what is the reason for the higher tax rate in this quarter?
So basically, higher tax rate is that's basically overall Q deferred tax provision basically, and that's overall ESOP cost was there last year versus this year. ESOP cost was not there. ESOP cost was there this year, and ESOP provision was there, tax provision mainly to be ESOP and Hanuman Agro merger was there. So that's how extra tax provision has been.
Thank you, sir. Thank you. That's all from me. Happy Diwali, sir.
Happy New Year.
Thank you, sir. As there are no further questions, I would now like to hand the conference over to management for closing comments.
Yeah. Ladies and gentlemen, thank you so much for taking time out. It's always wonderful connecting with you all, and now try our best to take as many questions and answer your questions. In any case, any of the question or any of the participant has missed out asking anything, feel free to reach out to us. We'll be happy to answer. Thank you very much, and wishing you all a very, very happy Diwali ahead.
On behalf of Bikaji Foods International Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.